Good morning, everybody, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are at the Toronto Trade Summit. We call it the Toronto Trade Summit. We got some super keen guys here that are eager to keep learning and learning ICT stuff, applying ICT stuff. It's a pleasure to work with them. It's really nice to see the enthusiasm these guys have for the charts. We were there like 8 hours yesterday. It must have been pretty close to 8 hours. And we just talked about setups and markets and get to know each other. Awesome guys. Reza, Russell, Hadi, excellent. The coaching Hadi was giving was awesome. And Reza, wow. Now if you guys ever meet a smart dude, that's the guy you want to meet. Reza, he's like PhD, super smart dude, and picks up this stuff really fast. So amazing. I'm super proud of these guys. Russell, looking to learn, looking to gain more knowledge in this ICT stuff. It is excellent. And they're making notes. And you can tell when people are genuinely interested in learning something. They make notes, they listen, they apply stuff, and they put the learnings to work, man. And it's a real pleasure to be with people around people like that. The energy is awesome. And I love talking about this stuff all day long. So let's get back to it. Let's talk about what we're looking at this morning. So yeah, awesome to meet those guys. It's always a pleasure to meet up with subscribers from all around the world, and you guys haven't disappointed. It's been a pleasure. And thanks again, Hadi, for helping out, buddy. You're an awesome guy. If you guys can ever get to Toronto and meet up with Reza and Hadi, do it. They're awesome guys. Awesome guys. Ohio, got friends in Ohio now. Russell, you guys want to meet up with Russell? Great guy. Have a chat. Get to know these guys. They're keen to learn. It's a pleasure having them in the community. All right, let's look at where we're at right now. Let's make sure we got a live show going. The 16th, there we are. Stand by. Kind of hoping we'd have there we are. Wayne, damn, I'm in Toronto. Wayne, you could have been here, man. Where in Toronto is taking place? We call it the Toronto Trade Summit. It's just a couple of guys getting together in a hotel lobby. It's not really what you'd imagine, like a giant convention with hundreds of people, though we may get there one day. So Wayne, yeah, you're welcome to come join us down here at the Holiday Inn downtown. That's where the action is. We'll be down here this afternoon, this morning. So yeah, come join us. It's always a pleasure to meet somebody new. Where are we at here? There we go. So let's see where we're at here. Can't get attached to their one here. We're in Toronto, is taking place. Love to be part of this. Yeah, we're just kind of sitting around shooting the breeze, talking about charts and all that stuff. So you're welcome to join us, Wayne. Yeah, let's have a look at the markets here. Let's look at the hourly mean threshold of this candle. We're already just closed above it. Looking at this hourly candle right now, see if this is providing some support down here at the mean threshold. I want to see if this starts to get a kickoff here. So you start to look down at the lower time frames, kind of like what we were talking about yesterday. You guys, when it's hit a higher time frame PD array, so we're looking at this candle acting as a propulsion type candle to keep propelling price higher. You look at the high, half the wick, the open, the mean threshold, and you wait and see if this freezes on one of those, and you look for any chance down here at the lower levels to see if there's a reversal that supports that level. So we've just popped through the mean threshold of this candle here. Let's just make sure we're in there. We have found the right end of it. So that would be 57. So yeah, we're well enough above that mean threshold now in terms of the body. So I want to see this start to climb up higher from here and see if we can start making a raid on this hourly upside liquidity at the rejection block and perhaps make another new high here. But that's the one you have to kind of keep an eye on these lower time frames, because if we end up starting to eat through this candle's mean threshold, look for continuation here. So do we get support off this level and keep going lower? So remember, you guys, when I was talking about this yesterday, you want to start to hunt back through this level, and you're hunting for this right here, right there, as an area of interest. This is my area of interest. I want to see if we react off of this, so we can come back inside this last down close candle. It's low, it's open, or sorry, it's low, it's close, and it's mean threshold. And you give it, because it makes up the candle that makes the SIBI, you've got to give it some wiggle room. So if we start getting on top of that, then we're looking for another run back into this range here. So anywhere inside this candle or this SIBI here is what I'm looking for support, for this thing to keep coming lower. Then that's the next potential price leg lower, which means this should give up the ghost and keep hunting lower. Just started trading the ICT. It would be great to meet someone in Toronto that could get a mentor. I could get mentored by. Oh, that's not like I want to offer Hadi services, but Hadi is is my go-to guy in Toronto. I'm sure he'd be happy, and you can meet him up on the Telegram channel there, and you can bend his ear in there. Just click on the Telegram link in the description above, and meet up. Hadi's in town, Rez is in town, so you got some guys can hang out together in a little group and have a regular chin wag once a week, once a month, whatever. Bounce ideas off of each other. That's always great to have. Or you just hang out in the community, and if you get some time to meet up with Hadi or Reza in the future, you'll have an opportunity to meet those guys. That's what the community is about, all helping each other out. And believe me, Hadi's got lots of skills. He's keen to help out people. That's what his passion is as well. So it's all good. It's all good. So far this candle's holding. I like this. Nice reaction off of here. We're hunting for this discount array right now, this box. If I can get through this discount box. Reza, what do we do? What are we looking for? Quick, what's the question? What's the answer? What are we looking for? What trade model are we looking for there? We're looking for extension, or we're looking for extension, and then we're looking for a continuation. So the two models after here. Well, welcome to the team there, Wayne. I hope you do really well. You've got great people in here that are keen to help you out in this community. There's no drama here. No one's going to sell you anything. No one's going to be pushing other principles at you. Just ICT stuff. And it's a bunch of people that are just keen to learn it, and no one's out to sell you anything, man. If you're just starting out, learn from the horse himself. Go study ICT's material, get really good at his material. And then you can come here and watch how it's applied and study price action on a minute-by-minute basis. You may not see a lot of trades in here, but you will see minute-by-minute analysis and sometimes 15-second at a time analysis. So you'll see how laser accurate this stuff can be. When the markets are moving in the way they're supposed to, in a nice clean fashion, you'll see precise setups, precise continuations. You have really good biases. Half the problem is if you can figure out where the daily bias is going, you can catch a lion's share of the day. So we're just rinsing and repeating the same concepts every single day, because once you get stuck in once you get a confirmed trading model that works for you, all you need to do is stick to that model. It's like I was telling you yesterday, Russell. All you need, you could just trade internal range liquidity as your model, and that's it. And you could get rich off that. Just trading internal range liquidity, doing nothing else but that. That's all you'd need. But people seem to want to have, you got to have a million different ways of looking at the market. And it's like, look, do you want to treat it like a business? This is your business. Trade internal range liquidity. Maybe you want to trade external range liquidity. Maybe you want to trade breakouts, or maybe you want to trade, I don't know if you want it, but consolidations, large consolidations. I don't know, anything. Whatever your model is, wait for it. Don't chase after everybody else who's got a whole new model that they're making money at it. Who cares? Just wish them well and wait for your day. Wait for your setup. Look at that nice little open, crazy snap. Up, down. So the first impulse was to go higher. Cleaned out that liquidity quickly cleaned up both sides of this little range here. Let's just wait and see what happens from 8:30. So far, no body has broken this mean threshold. We've had a little wick down in here. We've had no body breakthrough here yet. So if we continue to push higher, look for the rejection block. Half that wick, hold high, and then we're hunting further up into this, further upside 4-hour objectives. You got lots of liquidity and lots of fun stuff sitting up there. So if all we're doing on a 4 hour is coming back into, if we come down and tag 014 and leave this open, I would not like to see us get below 995. If you want to go higher, I want to see a portion of this stay open, and 995. I don't want to see us get lower than that. That's the line in the sand, right? Remember this main threshold of this candle? It's the largest up close candle. We did not break the wick, but we have broken this high here with a body. You come back into it. It's close. Line in the sand is the mean threshold for me, and I want to see that stay open. So I'm just gonna feel this out and wait and see what kind of reaction you get in here, whether or not it comes back down, and then we're gonna look for a reversal pattern down in the 1 minute, 5 minute. So ideally you wanna see this level, close above it. If you're going box to box, the old box to box theory, look at the range that we got here. Here's your box premium. This is the premium level, which we happen to be in right now. We've just nailed the premium box. And then look at the discount box and tell me this isn't where price is already hunted for. This is the discount box right there. We ran that one and we ran that one, all in one candle, box to box. Okay. So now what are we looking for? This is internal range liquidity. Has it been hunted already? Both ends of it has. And where are we sitting? We're sitting in the middle of the range. So do you want to trade this? No. Wait, unless you guys are already looking for here. I want to see it come back down, tag this, and I'm long. Then it's tagged you already, you're already in, and you're going long. I'm not entirely convinced just yet, so I'm gonna wait. Someone forgot to tell me the market makers that 8:30 data release today wasn't happening. Hilarious. If that doesn't show you that the system is rigged, manipulated, algorithm driven, I'm not sure what does. Yeah, exactly, Chris. Yesterday, it was funny because we were kind of, it's interesting to watch new folks when they look at this stuff and then you show them precise entries and you show precise points, data points that consistently get hit over and over again. And you say, what do the fundamentals have to do with that? What do the office boardroom meetings and the president of this company doing this and some scandalous thing happening there, what does that have to do with algorithmic delivery? I don't know, maybe there is another reason that has something to do with it, but you can see the algorithm reacting. You'll see it turning. We've got consolidation. We've had this whip down here. We've got a change in direction. See how we've got this low's been taken here? So you take your box tool and you put it around the first SIBI. So this is what we were talking about yesterday, Reza. We wait for a low to get taken in a higher or a large range. We're looking for a downside objective. The downside objective's been hit. We have swept out some lows. We swept out all this low here, right? And then we see a reversal happening. The body trades above the reversal, and then the reversal. And then here's why the 830 is such a bugger and it can take you out. This, if we ignore this candle, this is what we wanted to see. Come down, give it a little tap, and keep going. This is the 830, slam, slam. So if your stop loss was sitting there, just that one candle alone, you can see the volatility and the manipulation in the market. Just quickly clean out the liquidity on both sides, and then it's got to decide where it goes from here. So if you completely eliminate that 830 candle, this is ideally what you want to see. The next candle would be open, come down, tag our reversal, and then continue to the upside, hunting premium liquidity inside the range. That's an internal range liquidity hunt. So you'd be entering in there, Reza, like we talked about yesterday. This is the internal range liquidity model. And then we're looking for a take profit model 1, right? You quickly draw that line out there. Again, I'm going to ignore that wick for a change, this big wick, and ignore the opening candle. Because if you didn't ignore it and you took it right before a news release, you're asking for this kind of trouble. You're looking to get your stop loss taken in and you go, this shit doesn't work, because you picked the wrong time to enter into the market. Wait for it to give its little reaction, its manipulation, settle down, and then this is the kind of thing you want to see. Come down, tag that level, start glowing higher. So what do we say at 50%? What will we do if our stop loss was sitting down here? Again, ignoring this wick. What would we do? We would have our stop loss sitting here. We'd enter in off of our fair value gap. And then we'd start to, as soon as we break this high here, you pay yourself. I know I always said 50%, but as soon as you break a high, get in the habit of getting the rule. You break, take that, pay yourself. Move your stop loss now to break even. You hit 50%, half your trade should be off at 50%. Okay? So take 10% out there, take another 40% out there, move your stop loss to break even plus the cost of your trade. Now you're in a risk-free trade and you've made a little bit of money in your pocket. Internal range liquidity, this is just an internal range liquidity hunt, and we're looking for internal range liquidity using the take profit model 1. So you get half your trade off here, you get to 62%, take another 10% off. So now your 60% of your trade is off, and then you move your stop loss from break even plus the cost of the trade to 50%. So now you've definitely guaranteed money no matter where you go. All right. Then it runs to 70%, move your stop loss to 62, take 10% off, take another 10% off at 75. Then you move to your stop loss to 70. And then if it runs to 80%, 80% of your trade is off by this point, and you leave the rest to run unless it comes back and tags you out. And it does here, you're done. So that's your majority of the internal range of liquidity is done. You've taken your entry rate here at 43. You've unloaded 80% of your position off at 79% right here. So that's 20 handles. And then it comes back and takes you out. So now what do we wait for? We wait for this bull trap to break to the upside. We get an up close candle, come back, and then we look for the mean threshold of that. We don't want to see the mean threshold. It closed below. It happens to line up with the confluence of this candle's open right there. Just a little tad bit below the high and the open. And now we want to see that keep going higher. Good morning, Hadid. Thanks for coming out yesterday, buddy. I appreciate it. All the guys, I'm sure, appreciate your input. I know Russell did. It was a good time yesterday. Man, we had a lot of fun yesterday. Just chewing the cud, man. Just talking charts. Isn't that not a delicious little perfect entry? A continuation there. So you've got all your internal range liquidity. Then we look for a range extension model. So we look for, wait for this candle to get broken to the upside. It does right there. Then we want to see it come back and tag it and then leave. And there you go. It's left. And now it's done a range extension. Now we look for a continuation model. Isn't this beautiful? It's a beautiful thing, man. So you've had your entries just before it, after it happened. I gave you retrospectively after this ugly opening. Then I give you your 50 to 62% internal range liquidity hunt. And then even if we ignored this candle or we didn't ignore that candle, there's your entry there for a continuation to the upside. And there's the range extension. Pay yourself. Or pay yourself at this high, pay yourself at that high. And now we wait. Now we wait for the same kind of thing we had here. All of these candles are up close candles. All of them. We wait for a body to get above that, find support, because we're looking for higher time frame perspective. We're looking for a new run above this old high right here and dig deeper into this premium box. And then we're hunting for the next level, our P2, P3. Yeah, it was tons of fun, hey? I really enjoyed yesterday. That'd be awesome if you could get, we get Wayne, we'll meet Wayne, and you'll have somebody else that you can mentor here as well. So we'll just wait for our candle to get above here. We see how this candle came down, found support inside this candle. Its wick and the body, we want to make sure that holds price on a 5-minute level. We came down inside this SIBI. We had a body come up or open. See how we traded above it right here on a 5-minute chart? It came down, entered into this for a long, took out the premium level, box to box on a 5-minute trade. Now we're just waiting for this to close above here. We're looking, and you've already got range extension already. So now we're looking for how is this big monster candle going to freeze up here and create a fair value gap above this level. That's what we're looking at next. So because this makes up our SIBI, you have to include the whole thing. So look at your 50%. Remember we were talking about this yesterday, Reza and Hadi. This is the thing I was telling you about, the extra new piece I wanted to share with you. If the last candle that makes the high is included in the candle that makes the BISI, you have to include all of it. And so all of them here, you're going to have to use the bodies to find the midpoint, and that's what you don't want to see get violated with a closed candle. This is what I want to see. I want to see a nice, see how this little continuation that you got here? Pay yourself, leave the rest to run, wait for this fair value gap to form. Now you want to see a little fair value gap form right here, and the next candle come down and give you a nice little graded response. On a 5-minute chart, if that freezes right here on that daily or the new day opening gap, comes back down, creates a little fair value gap, and then just comes in and taps it. Or what Reza and I were talking about yesterday, if you kind of put this candle here, and then you drag this up until you get 50%. So put your stop, anchor your fib tool right here. You drag it up until 50% hits this high. Then this is where I'd like to see candle. Just out of curiosity, I'm trying to reverse engineer candles now. I'm trying to anticipate where candles are going to exactly stop. How's that for craziness? And I may not be successful. These are things I'm just trying out. So you anchor here, you pull it all the way up. I didn't share with this guy with you yesterday, but here's something new for you. Anchor here, pull it all the way up until 50% hits this thing. That is the level I'd like to see price stop on for the fib tool or for the fair value gap to end on. So if we just wiggle around here, that's where the wick, I want it to see it stop there, because 50% would be perfect match right here. So it's a rough estimate. So if it's not working, then forget that idea. Let's see where that ends up. Now 50% can also be right here on the bodies open. Now that bring your back into there. So forget that idea. That's not working. But that's how I'd reverse engineer that. I want an estimate or an idea how close that is there so that I can look for 50% of this usually and can line up with perfectly with the top of that candle. So that's how you'd estimate when it's getting a big bold candle like that, where it could, in close approximation, come back to creating a fib or a BISI right here. And once you go to BISI above that market, we're looking at this level and we don't want to see it get broken to the downside. So graded response now for the next 5-minute candle, which gets there in 3 minutes. When that stuff comes down, we want to see a greater response. So A plus is just leaves. A is just an institutional order flow entry drill, taps it. Now this could come back and tag that right there and leave the rest of this open. If it fills it all in, not such a good sign. We have a return back into Okay, here's what you want to see. Before that high gets taken, you want to see this close above here, come back and use this as support to go higher, and then create your fair value gap. In this particular instance, it's run all the way back up, and now it's coming back down again. So we do not want to see it get through the bottom of that BISI. It starts to close through that. Your line in the sand is right here at 50% of this last up close bullish candle. And then pull your fib tool from low to high. And if it eats through that, it's hunting for this. So we're just going to watch this right now. And I want to see if it tags, find some sensitivity in this box. And then if it starts to run through there, look for the high, which is still inside the box, the close, mean threshold. These are important levels, and if they give way, then we're hunting for this down lower. So once it comes into that level, start hunting for your reversal. So for here, you want to see it break above here, come back, find support on that, and start pushing higher. So watch that level. If this rolls over here now, anticipate this running down one more time into this BISI. Watch right here, there's the mean threshold. Watch the body, 13 seconds. That low has been swept right there. It's like a couple of ticks. That low on that candle is 0.80, 0.8075, and the low on this candle is 0.8050. So it's like 0.25 low below that. Bodies are respecting it so far. We got a wick up into the mean threshold. So are we going to continue to push higher, which is that retracement back into this candle? And you want to see it take off. So watch right here. We'll meet up after the show. So I'll be downstairs probably around 11 o'clock. So if you want to meet up then, Wayne will be in the lobby. Just you'll see us. We'll have our computers open and we'll be at the computer table there. Morning, Abs. How you doing, buddy? Are you coming out again today, Adi, or do you have things to do? I understand if you do, man. You don't. There's no pressure to come at all. Watch that level. See how it's reacting off of here. That's your like line in the sand. If you want to go lower, you don't want to see that go any higher than this. You want to see this hold, roll over, and start coming lower now. Take this out. Those who want to go higher, that has to break to the upside now and use this as support for range extension and continuation. This is the range extension continuation model you'd use in here. Not today. No worries. No worries at all, buddy. Good morning, Craig. We're gonna need some. We put some pictures in the meetup in the general area there on the Telegram channel. We had that. There's 4 pictures in there of us sitting at the table, smirking like a couple of cats. So see how we're just kind of banging on that PD array right there? That's the mean threshold of that candle. Banging on that one, and we're stuck inside this little one that wants to go lower, and this one wants to go higher, and we're stuck inside them right now, waiting for a body to break out on either side. So let it just bang around in here, and we have to figure out what we're going to do. So wait for the macro maybe. Oh, we're in the macro already. You're at work till 3:30. That's all right. I'll be here all day. I'm here till tomorrow morning, and then I'm out of here. So give us a little, if you're on the Telegram channel, just give us a buzz on Telegram. And if we're still downstairs, then come join us. I think Reza's coming in the afternoon. So watch, see how it's kind of just banging around in here? Just kind of keep your eyes on that area. Wait for a breakout. Oh, good. My laptop or my iPad finally kicked in here. You're looking for an index short, are you? Well, if we can get above here, we're looking for a reversal. Anywhere inside here, a retest of this whole area in here is where the concern is, all the way up to 171. So we still got quite a few points to play with, 171. So this is inside this box. We'll see if there's a reaction inside this box. So look, we can divide this box into our quarters and watch the sensitivity in each one of these areas. If you don't get through 50%, then we're looking for some weakness and we want to see it go lower. That's what this first big run up in here was for. Then it bailed, went nice and low, and then came back, and now we're hitting it again. So here's 25%. So typically 25%, you want to see weakness again and roll over and go lower, or it starts to march through, take this high out and start to break through this 50% of that. Then I'm looking for 75 in the upper portion of this fair value gap here, because it's a reclaimed fair value gap from this side. So we're just seeing it starting to creep out of here now. So we're waiting for a body to close above here and through the mean threshold of that candle. So then we've got an opening right on it. See that? Actually, this opening is right above that mean threshold. Good. Now just wait for a body to close above here and then look for a retest of that to keep going higher, or look for your fair value gap. This is the range continuation model. So the continuation model is looking for a nice big fair value gap that forms above there, graded response and continuation. Good morning, Ali. Let's look at some other levels here. Let's look at the British pound. Give you guys some of your Forex traders that are in here. So far, the discount box has been hit. So I want to see 134.87 get closed above. The internal range liquidity, you couldn't get that already, so you have to get down into the lower time frames. This is the daily chart. I'm looking, so see how this little change in direction is here? I want to see a reversal pattern in here. Once this low is taken on the daily, you start hunting your reversal pattern. So go to your 4-hour chart. So we're looking here 2 days ago. So we're looking on the 14th, Tuesday, the 14th, for a reversal. 14th, 10th, 14th. Here's your reversal pattern right here. We wait for a body. And this is a 4-hour chart, you guys. And this is the British pound. That's a 4-hour reversal. I want to see a body close above this level, but I don't want to see this get taken out yet, with a body that is. I want to see it close back, give it a tap right here. Look at that perfect level tap, and then it can leave. So there's your perfect entry for continuation. What am I hunting for? Box-to-box trading. This is my box-to-box trade setup on a 4-hour chart in British pound, right there. Box to box. Perfect in, perfect out. Done and dusted, internal range of liquidity, take profit, model 2. You gotta love it. Now, I know you guys who were here yesterday just sitting there shaking your head going like, how do you do that? How do you catch the most perfect entry on a 4-hour chart and run that all that way? So literally since Wednesday morning at 9 o'clock, you caught this run up. And you start targeting that. So you get your trade on, you move, as soon as it breaks that high or this high, you move to break even, give yourself a little bit of change, and off to the races you go. You walk away from the charts and you come back this morning and go, oh, look, with your little cup of coffee, and you go, I'm just trading a take profit model 2. I don't care what's going on. I'm just hunting for my premium objective. Done. As soon as you got to break even, you let it run. Walk away from the charts. Wouldn't it be great if you could make your entry at 9 o'clock in the morning while you're getting off to work, and you get into break even as soon as it breaks that candle, and then you just go, oh, I'm good. I got the rest of the day to go have fun. And you come back in the middle of the night, you go, okay, it's still moving in the direction I want. Move your stop loss to an old high once it's been retapped again, and you just go, good, that level's been hit. I'll put my stop loss there, let it ride. I'm still aiming for my upside objective. And you put scale outs at scale out 1, 2, and 3. If you had 3 lots in there, scale out 1, 2, 3. Stop loss would move down into here. That'd be it. That's your take profit model 2, you guys. It's delicious. That's a really nice trade. And you can sit for days waiting for this to happen, and you catch it, and you've made all the money of those people who are impulsive and just trying to nickel and dime their way in. You catch a perfect trade, and you just sit there and you rake in all the money for the whole week in a couple of days, or over 2 weeks if you have to wait for this kind of great entry. Or even if you did this one, you said, I'm going to go from box to box. I'll show you in reverse. It doesn't matter. You caught this one here. This is your box. I'll extend it all the way back here. As soon as a body closes below it, trades back to it, we get short. What am I aiming for? Box to box trade. This is my box to box trade, and you'll love it. Trust me, you guys. You'll love what I'm putting down. That's box, premium box, discount box, inside this range. You enter in here and you get out right there. Look, oh, look at that. How delicious is that? Scale out 1, 2, 3, you're done. And then we have a new one forming. Take profit model 3. If you use my take profit model 3, which is as soon as I get into this trade in this BISI, I wait for a SIBI to get broken to the upside, and then I get out. Nothing, nothing, nothing. This one does not get broken. Massive one runs all the way down here. Pay yourself at lows. And then finally, it goes down. It did not break it here, and it kept going even lower. And this one finally gets broken to the upside. And you go, now I close that short or that short trade off there. And what does this show us? This is our new box-to-box long. So I've got this short, paid myself here, or in take profit model 2, take profit model 3, I wait for my SIBI to get broken on a close to the upside. It was just like scaring the crap out of you here. Then it rolled over, created another SIBI below. You finally broke up above it, and you go, now I'm out of that short, and I'm in this long. Back to box to box. And you think that's not algorithmic. You think that Anybody had a meeting that day that was talking about British pound should stop it there. That's algorithm, baby, right there. Beautiful. And you want to talk precision data points? Like, come on. You can't ask for nicer than that. That's a 4-hour chart. And that's since the 25th of October or September. That run happened. Unfortunately, oops, let me reverse this. You didn't get in here, but what you're looking for is right here. And the moment that broke that, you go down to a 1-hour chart and say, can I get in on this trade before it, now that it's broken that high, can I get in on that? And I bet you'll find an entry off this thing here to catch this run up from box to, oh, what's back here? A box to box all over again. Done. Wait for your setup. There's a change in direction here. Mean threshold of that candle. Still holding. Creates a reversal. Bang, you're short. Target. So box to box, box to box, box to box. It's a delicious little thing, my friends. It's a delicious thing. Anyway, that's pound. Pound it down. Euro. That's a 4-hour chart, by the way, that was. So you'll see that on all time frames, all asset classes. I don't care what you're trading, stocks, bonds, futures, anything that runs on an algorithm. When you have clean price action, oh, it's delicious. Morning, JP, how you doing? First D1 discount, one box below 50%. There it is right here. There's D1, D2, and then the bottom of this D3 here. So D1's hit. Look for, you can retrace back into here, back to a level that hasn't been tested yet. So look for that right there. And then you want to see anywhere inside here to roll over and come back down and take that. If it rolls through there, then this is just running back into the discount area to run higher. So wait and see if that closes above there. If it doesn't, we're still targeting down here. So keep that in mind when you're looking at that. Bitcoin. So Reza, when we were talking about this yesterday, about going through tons of different charts, this is like, forget that says Bitcoin. It's like NASDAQ. We're just looking at another chart that produces an algorithm that we're trying to analyze. So ignore that over there. Just look at the charts and the setup's exactly the same. And you say to yourself, do you want to play in that? Does this look like smooth running, clean price action? And then you just go click, and you go away from that one, and you go, that is one I want to play in. And this one here is, I don't want to play in micro Canadian USD. I don't want to play there either. And then you go little piggies. Where's our little piggies? Maybe look at that turn there on the little piggies. We called little piggies from way back here. Remember that? Remember those good old days back in September? Actually, it was back in August, wasn't it? Yeah, we were calling these big runs up. We had the massive run up to this area we were looking for here. It hit it, then ran through it, used it for support, kept going higher and higher. And our little piggies. And now we've got a break in market structure on the downside. A retest inside our SIBI. SIBI's broken. Retest the SIBI, keep coming lower. Oh, it's macro time. How can it be macro time? I don't want my clock saying macro. We're ending the macro at 9:07. What are we at here? 9:07. Soybeans. See our reversal? It's the same thing every single day, you guys. Why do I think there's people trying to get in here? Oh, my brain keeps hearing shit. Anyway, there's your reversal right there. You come back in. You want to see precision, fellas? Look at that. Look at that. That's the kind of precision you're looking for. go down to 1 minute chart in here and look for your entry, or take that long. This is what we were talking about yesterday, Reza and Russell. The ideal place to catch your short would be right there, because if you're wrong and it trades a body through there, what do we say happens typically? For range extension, we look for a retest of the BISI and then go higher. So the ultimate entry would be to go short right there, and the stop loss would be just above your, well, I'd have to put it up here. That's a stop loss. Your fail safe would be the mean threshold of that candle. And we explained yesterday about fail safe versus stop loss, and when a stop loss becomes the fail safe. The stop loss is only used once, and then its interpretation is changed to fail safe, and knowing where price action violates a certain level and makes it bullish. So anyway, right there is where your ultimate entry short would be, and don't want it to close above there. Ideally, you don't even want to see a wick. See this? You don't even want to see a wick get through that, and that wick hit perfectly on there and snapped off of it. That's the kind of price action you want to see, and that's the kind of price action you must demand from the market. If you don't, and you're willing to let it float and say, yeah, it could, maybe, I may be not in the right spot here. Oh, I think it's going to take my stop. Whoa, 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 whoa. If you haven't recognized, your rule is, I don't want to see that break there. It has to hold that. If it goes through, I don't care if I'll take the L on that one. I'll take the loss and wait. I want clean price action, and you must demand that from the markets. If you don't get it, then you wait, because it's there. It's there. It's available to you if you have the patience to demand it. So right there, you'd have been short. You're aiming for, is there a downside SIBI in here inside this range? There isn't, right? So if there isn't one, we have to go to these negative, or these discount, or not discount, bearish order blocks, and see if what kind of reaction we get off of them. If we go charging through them, sweet. Look for the low. Look for the rejection block in the old low. If you take the old low, look for a retest of the old low. And if you get, because there's no SIBI in here, if the retest doesn't work, look for closing your trade, because now you got a little slight little imbalance down here, change in direction. If we come back into this range to 50, 62%, you have to give yourself that kind of wiggle room. A D, remember I was telling you about the new Model 5? This is the Model 5. See how you've got this potential change in direction, and you've got your BISI up here. Think about where your stop loss has to be if you want to hold this thing all the way down to a discount, which is down in here. And did I even hit that? No, that hasn't. Or pull your higher time frame. Your higher time frame objective. So look for a 4 hour, which is right here. The 4 hour would be right there. So where your stop loss was based on that one, hourly is where you want to be, and let that run for your 4 hour objective. Then we want way down here. Once you hit that, you're done. Take profit Model 5, man. Anyway, let's look at Disney. Still bearish overall. I guess we could retest this 4 hour area to roll over. We've already hit it a bunch of times. I wouldn't want to see it get hit once again, because there's a small little change in direction here that we've already hit to go higher inside this range. And we could target right here for this consequent encroachment of the 4 hour. That's what I'd be looking for in there. Craig, are you short? Are you long in oil? What are you doing? CJ is in the house. Good morning, Derek. How you doing, buddy? When are we setting up a North Carolina Trade Summit? When are we setting it up? It looks like we may be getting a couple of gigs down in the States next year. So we can kind of meet up down there. We might even risk coming down with our Canadian passports and risk getting thrown in jail. Sending us off, the ICE ends up taking us out to some El Salvador prison or something. Yeah, so I think we're looking at a couple of gigs down there in Illinois, I think it is. Illinois. Crude oil. So we want to see crude oil. Now, can you see this, Russell? Look at crude oil. Here's your assignment that we're talking about today when we see each other. What do you see in here? I'm going to ask you to tell me what you see from 8:30 to where we are now at 8:30 to 9:30. What do you see? Where do you see price going? I want you to mark up your charts where the premium discount arrays are in this area. Where's your entry? Where's your exit? Where's your warning? Bear traps. Put all that stuff on your chart so I know you have a good, clear understanding of what it is we're talking about. If you don't, that's okay. Just let me know and we can clarify that before you go. Because you need to know what those areas are, because the models that we talk about are not going to be supported if you don't understand those key levels. So just in this area alone is you'll get all of your trade rules, those 3 different trade setups I gave you, and the different take profit models all can be used inside this area here right now. So that's your little homework assignment for this morning. I'll be checking on that. Okay. Excellent. You all saw him say okay, right? So whatever Hadi went over with you yesterday, use that as well, because there's premium discounts in here. There's bull traps. There's bear traps. There's lots of cool stuff in here. Okay. There's a perfect entry there too. And you'd be killing it right now if you're in that entry. No, I'm not going to give you the answer because it's his homework assignment. So we'll give you guys something different. Here's old Bancos. El Banco. El Banco. Citigroup. You're inside this range for Citigroup. If you're a Citigroup banker, you're hitting right up into your premium array right here. It's got to get through that to keep going higher. That reacts off there and comes back lower. Then we're back inside this little range and you're stuck. This candle here has to be broken. Its mean threshold has to be broken to the downside to run for this liquidity. There's also a gap here. Pull that through. Watch. And then go lower. That's Citigroup. I'm not going to go through all of these, but gold. Look at this gem, gold. Never-ending supply of shiny bits. We get a retracement. A body trades above it right here. There's your entry. Entry 1. You don't even get a second level entry. You just get level 1. So you got your entry here. We're heading up. Last up close candle. Its mean threshold. Right there. Hit it. Wait for a body to trade above it. Body trades above it right here. Look at this. Look at this, you guys. Want to look at a nice little clean high get hit? And you tell me this isn't precision. I'm going right on the top of that candle. Look at the body. Come down. Tippy tapping. This one actually takes out the very next one right here as well. Yeah, body, this one is, its high is 0.81. The close in this candle is 0.82.6. This one comes down and touches a low of 0.78.9. So there's your retest. Just close, retest, go higher. Old high. I don't even think you get this one here. What's the high of that candle? 779. This one comes down to 789. So literally one handle short of this one, but it takes this old high right there, comes back, tags it, and then goes higher. Same one with this one. Body trades above it. You don't get an opportunity. So if we trade above that level and you create a fair value gap, institutional order flow entry drill right there. Continue pushing higher, take the high, body closes above it, come back, tap it, continue to go higher, change in direction, enter, you're short, 50% of this wick, 25%, take that wick and divide it into quarters. You can either scale out on the way down or wait for 50% to get broken to the downside. It doesn't, it just gets poked through, poke, and then all of a sudden it runs back through here. You go, I'm on the wrong side of this, get back in sync with it. We break above it. This is our range extension rule. We extend the range higher, wick through it, and now we're looking for continuation. And there is no continuation in there. It just kept running. You couldn't have entered in on a continuation. It just kept continuing higher. We get a run back down into this level again, perfectly, and then it runs up even higher. I guess that would be your continuation. Extension comes back to old high, includes this BISI, comes all the way back into it. That's your extension, or your continuation, sorry, right there. So Reza, it's as we were talking about yesterday, you want to see extension, and then you can say continuation is tabbing the old high all the way back into here, and it literally came right down to the bottom of that and then went higher. So there's your continuation rule. Pay yourself at the high and leave the rest on to run. That would be staying in gold, and now you just leave gold to run to $5,000. Let's do this. Where do we see gold going? If it's making new highs. Or we can do this one here. Make a new plan, Stan. Don't need to be coy, Roy. Just set yourself free. Hop on the guts. Don't need to discuss much. Just drop off the keys, Lee, and set yourself free. Upside objective. For gold. There's one. Now, how many of you are saying, it won't go there? $4,300 for gold. Are you kidding me? And remember yesterday we were talking about Russell. We were talking about how standard deviations, 2.5 standard deviations. Just put those in your pipe and smoke those two. So those would be the upside objectives I'd be hunting for. There's one standard deviation. So take profit model 4 You're asking about take profit model 4 yesterday, Russell. This is your take profit model 4. As soon as you get to 1, you pay yourself. And if you have a 4 lot on there, let's say you take 2 off here, 2 off here, 1 off there, and 1 more up at 3. And let's see if you can get a 4 banger out of that. Anyway, that's I'm jumping all over the place just because I'm looking at some. I'm a little disappointed in natural gas. Let's go, you guys. Ali says, I want to know what's going on in the DAX. The DAX. I want to see this. See how that's reacting? I want to see that hold right there inside this box. And I want to see a run down. I want to see a run. Run to the hill. If we get through this box, then I'm looking for this box. And see where we are in the middle between those boxes? You look right in the middle of them. So this is the pivot. This is the go, no go zone. And you want to see this use here to run for that level. And then we use our range extension and continuation rules after here, models after this one. Range extension continuation model after we hit this one. So I want to see that one hit it. If I want to see this still be bearish, I want to see that hit there and get through here and hit into this level. I don't know why my phone is going off at 9:25. That's not what the alarm is I typically have set. Anyway, that's the DAX as I see it on my, oh, that's a 1 minute chart. He doesn't want to see a 1 minute chart. He wants to see an hour. Where are we going? I see. A lot of wicks going on there. Let's see if we get revisited here. That's on the hourly. What's a 4 hour look like there for Ali? Okay, this is a little clearer. If we wick through that, look for a retest of this breaker or this rejection block here. And this level, I want to see 25% of this wick hold price and send it higher. As long as the bodies stay inside here. As long as the body stays inside that, we can get a little wick down into this candle or this little box we got down here, rejection block, and 25% of this wick. So I would take this wick here and I would go like this. And if you're not following this, or this is like, oh, that's not the chart I'm looking at, you're missing the whole point of my show. These are the kind of PD arrays you got to look for on your charts. So just pretend this is your chart. If you're not studying price action in detail on every chart, any chart you can get your eyeballs on, you're not actively pursuing your setup. The only way you're going to get better at this is stay in the charts and play and look for specific data points to find your entries on. Because if you don't, you're gambling. You're hoping and praying. So that level's got to hold, and you're coming up inside this range here. Pull your fib tool from low to high. See if you're above 50% already. If you are, there's your premium box, discount box, and they're like just over the 50% range. I have to check it now. I'm curious. Mr. Curioso. There's 50%. So that's your premium. Here's your discount. Box to box. And you've hit the box already there. Now you're coming back to the box below you. Now you want to see this hold, or you want to see this one break to the upside. Then I want to see the bull trap give way to head higher. So you want to see this hold here. If you want to go long, Ali, you want to see that hold. Otherwise, if you want to go short, and you want to target down in these little bissies down here, you want to see this give way, and then finally give way there. Con Sonar, Crazy Ivan. Crazy Ivan. Banks. So far, you're still not below here, Gary. If you're watching, you're not below 87.50 yet, so you're still good. With that one, Laurentian Bank's not looking so good. Laurentian's already traded below this level. It's using this level as support to go lower, and this is starting to break now. Now you want to see if this breaker holds price back now and rolls over and goes even lower still, and you're looking at this. Once this is taken, we're heading lower. So just keep your eyeballs on Laurentian, Gary, if you've got your charts. You're looking at the charts, keep your eyes on Laurentian. This is the range you don't want to see it get through. You're holding this long, that's my line. That would be my line in the sand. I'm already out of it, but that's my line in the sand. Bank of Nova Scotia. You want to see this low get taken before you start getting nervous about whether or not we're running back into this gap area here. You want to see a market structure shift below here. Otherwise, you're still right off the discount array. You're now back into the premium array again. This is box to box trading in banks. Literally left there, hit the discount box, reacted off of that, and then went to the premium box. Anyway, let's get back over here and say, hey dudes, what's going on? What have you been talking about over here? Good morning, Derek. Not in Disney yet, long crude today. We're still long in crude oil. Where's a little oil? Oops, that's not oil. This is oil. You're long in crude? Where'd you get in? What's your entry, Craig? And bag holding for the last Friday. Good morning, everyone. Does anyone think equal lows 2505 are exciting? This is looking good, Craig, for the highs here. Just wait for this little body here. If we can get a body above this and this premium array, box to box trade. This is like a very sexy box to box trade. Oh, I'm giving it away now. Russell's, no, I can't say anything more because Russell's doing his homework. I just gave you some hints there, Russell. Anyway, good for you, Craig, for catching that long. Look at that, Quate. Discount box. Oh, can we say box to box? Everybody say it with me. Everybody say box to box. Look at this deliciousness. Look at that. Right from consequent encroachment, zap all the way through. Say box to box with me. Box to box. And what is it inside? Look at the perfect levels it's bouncing off of. Mr. Mach 3. Mark's just giggling to himself. I know all about some Mach 3. Now I want to see that tap. and go higher. Right back into here. Now we'll see what kind of reaction we get from here. Do we drive back through it, or do we just tap that, eat through this? What else you got here, Hans? Does anyone like the equal lows? Let's look for the equal lows. What ones you looking at? What time frame you looking at there, Hans? Mr. Solo. Mr. Solo is going low. You mean these? This kind of equal low stuff? With the regular trading hour gap that just says, come down. Take me to the prom, baby. High's been ran out. That's been traded back into again. Now I want to see if this eats through here, and then Mr. Solo, we get below here, and this discount box, we use our range extension, and then a continuation model, and then Mr. Solo, we're looking for your lows. Just don't seek access, don't sneak access. 100%, okay, we'll do. As is typical, we will go take out liquidity high, or after we visit yesterday's close via day opening gap, go crude. Did you pay yourself at the highs? Did you pay yourself at the rejection block? I don't know how many times I can drive home the rule of pay yourself at rejection blocks. You may not, in this case you did, you may not get the high. If you've overextended and you're only reaching for this way up here and it's coming back in, it's squeezing you now. So you don't want to see, oh, I'm giving all Russell's homework assignment away. I can't help myself. I just want to help. I just want to help. Sorry, hit that level. Now we're watching to see if we eat through that candle. Take profit model for standard deviations. Yes, let's go. If you have money at Jeffries, I would get it out. At Jeffries? Who is that, like the local lender on the street? Is Jeffrey one of those local guys down at the end of the road that people have their money at his house? It's like, hey, if you guys got money at Jeffrey's place, you better take it out. His house is on fire. Who's Jeffrey? Is he a local land shark, loan shark? What NQ to take? The high and then looking south. Yeah, Ollie. Let us know if you see your highs taking. This would be your, excuse me, I guess you'd be looking for to see if this 4-hour chart has a SMT divergence. So in other words, if the 4-hour gets up here on a ES chart on the 4-hour, let's put it on the 4-hour. If NASDAQ takes out, which is really close right now, if NASDAQ takes out that high and ES doesn't, that's an SMT divergence, right? And then you say, all right, now let's look down at a macro time. You got to wait for your macro. If this is how I understand how you do it there, Ollie. You look for a macro that says, let's look at a 15-minute or a 5-minute and see if we have a divergent pattern here. So you look at a 5-minute chart or a 15-minute chart now. We'll look at 15. So we want to see that 4-hour take out the high and yet ES not take out the high. Then you look for your entry. We need a double SMT. So in other words, if we see this high here on a 15-minute, take out and ES it makes a lower high, then we have our second SMT divergence. We look for our entry below a lower time frame, like a 15-minute entry, and then get short. Is that correct? Is that how I see your double SMT? Do I get an A grade? How would you grade my analysis of your double SMT? So you say we have an hourly already. Let's look at the hourly. Hourly, higher high, ES, hourly, hourly, higher high. We have a higher high and ES, higher high, NASDAQ, higher high. So I don't understand your SMT. Those two highs are the same. Are you talking about from these two? No, they're still. Are we on the same chart? Oh, this is a 4 hour. No, we have a lower high. Look at that. Look at that. He's right. He's right, you guys. Higher high, lower high. We have an SMT divergence, you guys. Now we're looking for a lower time frame SMT divergence. So we have a retest of that BISI creating, and then a 15-minute. What do we have on a 15-minute? A higher high. We have an SMT divergence on the 15. Right? We have a higher high, and ES has a lower high. We have a BISI that's been hit, tested, go short, and we have a BISI that this got ran through. BISI still being held and then go short. So this is a little divergence to ES, right? ES is only coming up inside the BISI. NQ is running through the BISI, takes out the high, but we still have a body below here. So you wait for this to close, and there's your SMT divergence. Is that not correct? An A star, as we say in UK. Got an A star. Woohoo! So that's your double SMT, right? Now for a short. Short right there. Short! Go short! Wait for this to close. Come back into this, tap that, and then go short. I'm going to go short there. I'm going to try your SMT thing. Let's do it. That trades below. That's a close anyway. Trades back inside there. It does take out the high. And ES doesn't. And it does trade perfectly back in there. Look, ES is already on the tear down. So Kevin's probably in this for a run short. That's a short. That's a short. Albeit that would have taken out a stop loss. Now that you see the SMT in a bottom of the hour. So I guess you'd have to wait for it during SMT time though, right, Ollie? It's less probable. Is that someone knocking on my door again? Am I hearing things? I swear I keep hearing things. With a previous day's high above, it's less probable of working out. Is that what you're saying? So I'm about to get my ass handed to me. Is that what you're saying? With that so close, what, because there's a high. So the fact that we have an SMT on an hourly and an SMT on a 15-minute, that is not your reason for taking a double SMT short. a new rule is it's got to take out a previous high. So it's got to take out a previous high, then have a 4 hour, then have a 1 hour, then have a 15-minute. Russell or Ollie, you're getting a lot of rules here, man. Let's see what happens. Let's see if this holds, this little SMT diversion holds off of this BISI. And see it go shorter. We'll see if that holds. If that trades back through this on a close, then yeah, you're right. We're looking for higher prices. So 67.41. Not with the daily so close. We'll have to put our stop loss up here. There's the premium box again. No, I don't want to see it break through the premium box. It's done its thing there. You've done your damage. Oh no, you got one more right there. Okay, well, Molly, I tried doing that. I didn't know the extra rule on the daily. It looked like it was a nice little keen level there off of that BISI, but now we're already through the BISI, so my ass is neck there. We finally hit that little one there, so now I don't want to see that go any higher than that. I'm out. I tried your idea, Ollie. I didn't have the rule for the extra one, but that's what I hate about SMTs, man. It's not an SMT anymore, and I bet you this ES has changed up too, right? No. If that rips through there, then the SMT is one of those things that's a transitory thing, right? Where do you pick it from? So if you're looking, I'd have to wait for, according to your rule, I'd have to wait for the macro time, right? So I picked it too early. You have to wait during the macro time, correct? So I picked it too early. So we have a first presentation fair value gap, change in direction. Body breaks the high, comes back, uses this candle as support, goes higher, inside the range. Look for your premium box. If not, look for the breaker. We've traded above the breaker. We're finding support at the breaker, still going higher. So we're looking for this bull trap here now, and we've got this little inversion right there. I want to see if this holds. Price back right there. So between that high and that low, and we're right in there now. So that's the rejection area. If we eat through the mean threshold of this, through these little imbalances here on the close, look for the area that never got a chance to get tested. Oh, maybe it did. Stand by. It did. Look at that. Right on the money. Opened above, came down, tapped it. Perfect level. Run. Yes, I'm waiting for the previous day's high to get taken and rejection after continuation, and then I'm sitting. Bang, let's see now. Yeah, things start clearing up in the macro. I'm looking for short at 24,947. If it builds above the previous high, then looking for 25,197. So far, we're still inside this 15-minute, still holding. Look at that. And I put my stop loss. Gotta leave it, man. That's still holding. Still holding. Ran all the way back up into that premium level. And now we'll see if we can reject through here and come lower. See how that 15 minutes still holding? I bet you still got your SMT too, don't you? Higher high, lower high. And now we're in, just coming into the macro now. So body's traded above this level though. This one says, I want to go higher. This one says, I still want to go lower. So I still want to go lower. So for me, this would have to break through 25,051 on a close, like through that yellow line there, on a close to start running back into this regular trading hour gap. To get back in sync with range extension. I want to see that range extend. Change of direction. First presentation. Freeze below that, then come back into it, and then look for range extension. So we'll see where that ends in the next 18 seconds. Yes, I want to see if I can figure this damn SMT thing out. So now we're going into SMT time. SMT time. We're going into SMT, so now we have double SMT. So now should we be going short, right? It says it's short time. Get your shorts on. Put your shorts on. It's summer because we're going to be burning up the streets. There's the extension. Look at that. We just missed coming back and tapping it. Delish. But I bet you if you look over here, you'll see something. I bet you that lines up right there. That do in a big way. There's the top of it, right? Oh, you have to include that as well. You have to include all three of those because they're all made up of the same sauce. If you didn't include the imbalance, then that's right on the money. Range extension. Now you want to see continuation model. Is Russell in another room just tapping on the wall make me sound like someone's knocking on my door? Are you knocking on my door, Russell, and then running away? I swear people keep knocking on my headphones. I'm looking for consequent encroachment of the daily opening. That's a nice little retest of this right here. SM institutional order flow entry drill. Let's see this sucker run now. That just feels short to me, so I'm going to go short. If it gets back through this level, my stop loss will be above here. I don't want to see it close above here. This is a continuation. Wait for a body to get through here. Otherwise, this is just range extension. If a body gets through here on a close, then I'm on the wrong side of it and we're heading back into this range again. I don't even want to see a wick get through that. Not good. Wrong side. Watch here. retest this. We got our range extension, but we did not get the continuation. We did not want to see it close through that. That is the maximum level right there. So now if it trades back through here, you have to wait for a market structure shift. See how it's coming into this level? You want to see it stop there, not wicks. Stop and go higher. Inside that candle, it's open. We've run above this level. You'll use it as support now to go higher. And I'm looking for up here. See how it's getting pretty choppy in here now? Support. Look for this level here now. Is it me or this has been the slowest opening in a bit? Yeah, it's a bit literally seek and destroy right in that little 1 minute range. You run above the high, you run above the lows. You run above the high, you run above the lows. So it just keeps running, expanding, and taking out both sides. So internal range, box to box is all I'm looking at right here is an internal range liquidity hunt now. Russell, this is where you need to ask yourself, can you make money off of an internal range liquidity hunt? Just as that model, that's your model. Move to the sidelines. How often does it happen? You get really good at that model, you're killing it. That way you're staying inside ranges, make some money. Then when it extends outside the range, you just wait for the new range to begin and hunt for that. There you go. There's your premium box, box to box. See why the fail-safe said to me, as soon as I start to close above this level, I'm on the wrong side of it. And then you can get back in for a run that way. I didn't, but that's the next objective you're looking for internal range liquidity. So your fail-safe says, my stop loss could go up here, and I go, my fail-safe says, if we close above that level, I'm on the wrong side. It's going to hunt for premium range liquidity, which it did, hit perfectly. Now we're back into the discount level again. So box to box again. So you went from box to box to box. Now, if we eat through that and come back into it, you'd want to see a range extension again, and then a continuation, which is what we were looking for earlier before it decided to run all the way back up in there. So Hadi, when you think about your take profit model 5, where'd stop loss still be? Right there. And you say, I don't care about all this stuff. I have to give myself those two. And then let it run. Does that make sense? You understand why that take profit model is a little more painful? But if you have a downside objective, or you have a downside, if you could use Ollie's, double SMT principle, it had taken out an old high and you're expecting this to go charging down, a take profit model 5. You'd implement that and let her run. See, we've got a body that closed above here, and we're coming back inside that range. And we've also got a wick. So this is 15-minute too much chop. This is just not acting the way you want it to act. So not clean price action. Look at that, 5-minute. And then your 1 minute's just a little buzzsaw. So just a quick internal range liquidity hunt. As soon as you hit that, take out your profits, and then you might be just nibbling 20, 30 handles at a time out of the market. So from here, you have scale in 1, 2, 3. You would have had all 3 of them right here. And that's 55 to 95. So there's 40 handles right there for a take profit model 2. So you can see, Russell, how that would be internal range liquidity, done, dusted. Wait for your next internal range to play. So you just move to the sideline. Say, I just took 50 handles out of the market and wait. Yeah, I'm not messing with it, Tom. Oh, I'm not telling you to take it, but I'm saying if this is just the example I gave you yesterday about if you became a specialist, internal range liquidity, that's my model, that's all I trade. You can see how that would be perfect for you to run. Even in this crappy environment, you say, I'm just going to snatch whatever's in here out. My stop loss will be just below the mean threshold of this candle because I don't want to see it break through there. Hits it, runs it, comes back down, start this whole thing again, start hunting for that premium rate one more time. So this is like buffering. But that's more, it's another stuff that we'll talk about another day. Yeah, box to box in that array was nice. In short, looking for follow through. Feels like search and destroy. Exactly. I will wait. Oh yeah, this isn't playtime. So it's bouncing off the bottom of that little area of interest. It's driving back into that initial presentation fair value gap, pokes through it, but it's still inside the initial area of interest. We get through that area of interest and close below it. Then I want to see that accessed one more time to go lower or just start tearing through. Because if we get through that level, then I'm looking for this little fella right here. If we close below that, I'm looking for this area and that candle as support. Also the 50% of this wick. Put us inside that box as well. So we've got lots of little confluences that support price. We can get down here. All the time this is supporting it though, you're looking at internal range liquidity hunting. Not that you'd actually trade this because it's shit right now. So just wait. Keep an eye on it. Study price action right now. Don't just ignore it and go for a coffee. Watch these specific levels. Can you predict them? Can you point them out? Or are you using the excuse, oh, this is just random shit all over the place? Or is it hitting key levels? Study the price. Highlight your zone. Tell me what area am I looking at? Here's my discount area right here. See that? I've got a trade above it, and we're finding support in here. We're not We're trying to get through it. So that SIBI is holding price. That inversion there is just holding price. So until we pop, and it's overlapped with another one over yonder. Where was that one? Was it on the higher time frame? Oh, right here. I don't know why I always have a habit of pulling that back so far. So that's our other array we're finding we're bouncing off of right now. That's overlapped over and first presentation and overlapped over the top of this guy here as well. So we've got little support levels. If they break, then there's a high likelihood of us going lower. I want to see this level give way, come back, find support at that candle. Watch this one. Pop through it. Don't just give us a wick in there. Okay, that's fine. Come back, give this a tap now, and then drive through here. Let's tap this over low. I want to see. Give me a little tap on that one. Before you take out the low, go up there and give that a little kiss. Come on, take me to the prom, baby. Keep coming. There you go. Pop in there. Don't go through it. Then you're back into that choppy crap again. There's that level right there. Retest. Now give me a reversal here. Now just give me a change of direction. Come on down. Take that low out. This is the extension model now. No, you don't want to see that. Don't even want to see wicks getting up in there. That's crap. Did we lose the feed? Are we still live? Did you guys see anything there? Maybe I just lost my, let me just see if I can get this. Chop, chop. Chop, chop. Yes, we're still at it. See how it's not acting the way you want it to act? Move to the sidelines because now we're chopping wood. Look for something else. Look for a better, cleaner price action somewhere else. British pound. Look at that. That's delish. There's that order block. This little breaker here takes out these lows. That's really inside this big breaker here too. I bet if I put the mean threshold on that sucker. Let's pull the mean threshold there. I'm just curious to see where that came down. %, 75%. If this goes higher, wait for this candle to get taken on the upside. That's already mean threshold taken. And then look for here. Look for that little box up there. Ignore that. Not interested in that. Takes out the high. Trades above it, comes back to it, goes higher. That's the kind of range extension we want to, or range continuation you want to see. And clean, that's the kind of clean stuff you want to see, come back and go, right? You don't want to see the chop we're dealing with on the other markets. Wait for something clean to happen. Just got to get through here now. It's just stopped on that level. I want to see it pop through there. Oil. Change in direction here. Come back inside that candle. It held right on it. And lower. Market structure shift. Fair value gap. Institutional order flow entry drill. Goes lower. Takes out a low. Pay yourself. Fair value gap switch. Changes direction on you right here. Trade back into it. Look for a run on the highs. Takes the high. Look for the next range up. Look for order blocks, look for breakers, and look for 50% of that range, or 50% of this range right here. And there's 50%, I think that's it right there on the money. 50% of that range. Shift, trade below it, come back into it, keep coming lower. You want to see this little area here get closed below, right here. You want to see that close and then come back and use this as support to come lower. So still going lower in oil for now. There's your first goal of the objective that we put up there. Done and dusted. Next one. 436, 3, 4, 363. Hit the premium, discount premium we talked about, and hit that, rolled over. It's now closing through the premium, the discount. Use this again as support. Now we're digging into this wick that we talked about, 25, 50, and then take this next large wick. I like this one just because it's a swing, but you know, the large wick here is a you took the larger wick, 25% will put you here. I just want to see it come back in here, retest this, come lower on a 4. That's a 4-hour chart. We'll be waiting a long time for that. Oh, there you go. 1 hour's already done it. Retest, come lower. Traded through that level. We're testing that level. Now go shorter. Look at your regular trading hours starting to get filled now. That's a nice little retest. Come lower. Now we're looking for a nice little run on Look for the higher time frames now. So now the 15-minute, I want to see that kind of hold for a little bit. Come back and retest this level. I want that to close below here. It's got 58 seconds to close below that candle. This gives a little poke down, stay there, and then give me a retest of that mean threshold and this area right here, which is our level right there. 38 seconds. Watch where that closes. Important. This could be just a liquidity raid here. Then we're pulling back into this range, and we have to see if this level gets closed below. I want to see this one. 23 seconds. Nope. We did close below here though. So now you want to see it come back, retest this, and then you're looking for this low now, not that low anymore. So I'd like to see it come back and give 50 a call. Anywhere from 50 to consequent encroachment of this area of interest. There you go. Tippy tappy. Now you can go short. That's my last trail of the day. We'll see if this works. Stop loss is going to put just above there. I do not want to see it get back above there again. Change of direction right here. So watch. I'm closing that out if that freaking comes up there again. I'm out. I don't even like that wicks. That's too choppy, man. I'm trying to get it a precision thing, and if it's not giving me what I want, then stay out of it. That's still chopping around. So you can get meat grinder in here, and it doesn't matter how precise you are looking at your levels, you can still get a little meat grinder going on here. It's not acting the way you want it to act. I was kind of hoping we could stay inside this level here, roll over and come back down. But we've already rated the low, so the chances of us coming back and just tapping us would really have to be strong, aggressive run lower. But we still have that old high intact still. It's a retest of this high. Stay in here, man. Stay on the horse. Stay focused. Threshold. No high above here. Retest the very candle to the left. Go higher. Looking for this premium box again. Looking right here. Look for this box. It's like being in a grandmaster chess game. Where is it moving for? No body here yet. So this candle, this one's buried inside here. So this is still holding. We're in the premium portion already. I want to see that premium box get hit one more time. We've got a little discount box here. Hit that, roll over and snap into here. If you're just playing silly buggers here and just ripping back and forth, that will be my next area of interest here. If we don't close above that, don't forget there's a little imbalance up here as well. And we rip back into this level. We're already above these old highs here. So we can quite easily rip back down into here. Then pull up, push here. Nothing's clean yet. A lot of mental capital you're putting in on this, you guys. Oh my. They really don't want you using too much of their Wi-Fi. Or 10-minute stuff. Close, enable to close, look for fire, it's clear as mud. Exactly. Wait for that little discount. I'm just looking at this little discount here, premium here inside this larger range. We also have a cut through all the candles, looking at here. That's the top of this box. Still not even clean. I think we're going to retest this here. Let's look. So watch for this box and see if we retest this box down here. Box to box. If we eat through this, look for the mean threshold of this candle. And that little imbalance sitting right there. Finally broke through our highs here. This is the kind of stuff I want you guys to see. You see how you can, you see me get beat up in here, trying to get all cocky and find something in here. And that's just a buzzsaw, right? So I even deserve to get eaten on that one. But when you see something clean, like this is your range extension continuation. Range extension. Trade above it, trade back into it, nice and clean, and then we extend the range. Right? And the continuation, there's no continuation. You can't get in on that. That literally left for you and what just left. So that's your A plus entry. As soon as you see a fair value gap form above an old high, then you say you want to see it stay open. Now A plus is just as soon as it enters, you put one in and go along. If the BISI gets traded through on a close, get out of your trade, you're coming back into this run and you think, where is the first swing point? There isn't one until way down here. So you have to pull the whole range and look for 50%, which might be this candle right here, if that's the low. Let me just pull that one up there. It happens to be right back inside that BISI again. So watch this change in direction here. A retest right there. And then if we start coming lower, which we should off of here, it's only until we get back through that level. Now we're changed short, looking for 50, old high, BISI, BISI. And we'll see if this eats through here. You want to see support at that level. Keep coming lower. We're targeting that old high and this old BISI back here at 50%. If we get through this level on the close, you have a range extension and looking for another continuation model. A plus, leave. Wait for the reversal. There's the reversal. Short, back inside that range. So keep your eye on that. Look for this 50% on that level. Yes, what's that up to? Oh man, that's just choppy. Hit the premium. See, now you want to see this, tap this and leave. Now ripping through that again, coming back to the inside, that's just just adding more nails to the already ground out chalkboard. Closed for a loss, yeah. Gotta beat anyone up in here now, JP. Don't be too upset with it. It's like right at 9:30, it just went into chops film. Wait till after lunch. Now, this is when you close your charts up, or wait till after lunch. Wait for something clean. Keep your eye on that little level right there. This, I was expecting this just to hit this, roll over and come back down into this level, not pop above it and then come back into it and then finally run through it for this level here. Hitting it right now. There, see how I hit it? And we get a reaction off of that. Always comes back to rebalance. So if we get through that and come back into it, you want to see a continuation again. But look at that, right on the beezer. I'm not doing it as cleanly as I'd hoped. If I do this, what level in there do we hit 50%? No bodies break it. Rejection block holds, mirror that little imbalance we talked about up there. It hit it, reacted, changed direction. Right there, you closed below it. You came all the way back up inside it. Finally ripped through to premium discount. So it created a new premium inside this range. Ripped all the way down to the discount. And now we'll see if we come back up into this guy right here. Low, mean threshold, and then we're looking at that guy there. So there's 3 different arrays sitting right here. 1, 2, 3, and then the overlap of 4. So right now we're in 1, 2. I want to see that get closed below for rejection block. Hold lows or 3 and 4. If it rips through that, then you got the last one right there. And if it closes about 95, looking for a range extension. So I'm sitting at 44 and 95. 44, 95. What's that euro doing? Continuation. It ran through it, came back to it, and then continued range extension. Nice. Now, give me a bold candle above. So this is range extension. Now you want a continuation model to occur in here. So you don't want just a quick wick run, a rate on liquidity. That's just a range extension model right from here to here. That's range extension. It's just a small little model. Sometimes they can be bigger, but usually it's a small model. Run above before taking out the high, come back, tag you in. That's why if you were short right there and you traded and you were like, oh, it's closed above me. Damn, if it comes back and tags me out, I can get out of this short trade at a break even. That's what we mean right there. And that's clean, perfect little action for a run higher. So you have an opportunity to get out of your trade at break even and then go long. You get your range extension model and we continue going higher. So that's a range extension. Now the continuation is big bold candle above here. Create a fair value gap and then look for the institutional order flow entry drill, graded response to go higher. You got a body above it now. So there's 2 ways of doing your extension. One is come back and retap this high. If you don't get a fair value gap, I just want to see a retest of that high and then go higher. And I can come all the way down to mean threshold of that candle. So my line in the sand, and it does make up this candle, so you have to include, the BISI here as well, which strangely enough has a little civvy there as well, overlap. So first one, second, third, fourth, and then 5, 6, 7. There's all like a line in the sand. I don't want to see that level get taken though, that mean threshold. So we'll see what happens. See if we get back another little poke into the old high at 16713. Let's see if we go back there. Might as well watch a market that's acting more the way we want it to act than that chop that you're dealing with in NASDAQ. And if you can't get in on this, then you just say, oh, well, I'm sitting on the sidelines. if you didn't catch this retest here to go higher, then, and you're just looking for a retest on that high to go higher, then just wait. If you don't get it, you don't get it. Make sure you demand price action. You don't want to start getting below that level there. So you can come back and not so good if it retests there, especially after making these nice new highs. I'd like to see it just come back and just tap this high here and keep going. But we may not get that now. What's the next upside objective? Oh, we got equal highs above us this Asia session. $67.52. It's a very hard day to my D. You can get beat up pretty hard. So find a market that's moving a lot smoother in your direction. Watch it. Look for markets that are moving price action a little cleaner. If not, then close up your charts and move to the sidelines. There's other days out there that'll give you what you need. If today's not the day, then close up before you take too much hits. There's the retest on the high. And unfortunately, you gotta look at that whole range. There's nothing in here to trade off of. So you gotta allow yourself all this run into here or down here. The more it digs into that, the less love I've got for it. This is already probably 50% of this little range. Right on 50. That's sweet. Now keep going. Let it rip, go higher, no. Immediate rebalance, so now treat that like a fair value gap. If that rolls over and starts to come back down lower now, change of direction. Now in between here and here. So just watch to see if that right there starts to come lower and back into this. And you're in another little range. Oh, man. Yeah, she's coming down. That treat like that a fair value gap right into it here. Perfect. Now look for a retest of this here. Don't chase this, Russell. This is just crap price action, man. Just wait for a big reversal here. Run those highs out. Another one you run out here. 161. Close above it. Sweep, fair value gap. Body closes above it. Tap it. But how many times in there you got beat up that you look at this and go, is this finally getting clean? and giving me a run. Trades above this level, comes back into the mean threshold of the candle. You don't want to see that get taken. And then you get extension, continuation, body trades above, you come back, tap it. That's clean continuation model. So this is your entry, clean, run above the bull trap and the premium array. The premium array is taken. We trade back into the premium array, also back into this last down close candle and this swing, which is a breaker. We trade back into the mean threshold of that. It held price. Look for range extension. We extend the range. We want to see a little fair value gap occur. We come back down, tap the old high, push higher. Look for a new range extension. I'll come back, tap this, and continue moving higher. You want to see this hold no more than the mean threshold of that candle and go higher. That's when it starts to clean up on you. Otherwise, this is just chop fill. Yeah, they are there. You just got to wait for them. 215 your upside. 215. You have one. The next upside for me is at 161 first. Then I'm looking for 184, 188, 194. What are you looking at for 120? What do you call it? 1 or 215? Wow, that's way up there. 215. What are you looking at, Eddie? I see 219, 211, 211 to 217. What are you looking for, Eddie? You're looking for this body, wick, half the wick, 190. So anyway, there's the retest on the high. Keep coming higher. That would be relatively clean. We see that just keep leaving now. So don't forget this over here, Hadi. When you're looking at this 4-hour chart, don't forget to look over here at this. This is the box that can potentially hold you back. So we're looking for a retest, roll over and go lower. So you need to see this break through 165 and then start heading for your objectives. So just keep this in mind that you could still see a reversal in here. So looking for that 161 right there. Now I'm looking for 173, whatever the low is on that candle, 170. So 170 puts me right here. We'll see what kind of reaction we get out of that little spot in here. Right there. That's 170. Let's see what kind of, see if we get a dig around in here, if it bounces off of there or just ignores it and runs right through. That's nice and zoomed. We're waiting for a market structure shift. There's your market structure shift, your entry. That's a nice little entry long there now. And we're going to see how we act in here. Good for you, Hadid. It's a good call, man. Just took the weight and market structure break. Good for you. Well done, son. Well done. He's like, I killed it. I killed it. If you got long here, 15-second. This is a nice long. Breaks market structure. Come back to market structure. Tap it. Go higher. No body breaks the low. Body breaks the high. Comes back inside the order block. Runs higher. Yeah, it's nice. That's a lot cleaner, ID. Good for you. That's patience paying off, man. Good for you. Well done. Well done, senor. Yeah, chances are we're going to start hitting this. We can get up on top of here. We're looking for this city to fill, and then you've got the next BISI above you right here. And then relative equal highs. Got a ways to go yet to get those highs. $203 on the hourly. That's the next objective I have on the hourly. 183 to 195. Change your direction. Wait for this low to get taken here. So we go to 15-second chart. We see this, oops. You see this on a 15-second chart. We'll shift below the low here. Wick comes back into the body, into this range. Discount box, hit. You don't want to see it get back above here now. I want to see that kind of just roll over. They're coming lower. Take this out. See if this level gets taken out, and then watch this level here. We can get this through this breaker here. And then you're looking for this liquidity pool down here at 930. See if this holds or we get above that. We're above it here. Find support, come back into this range. Look, see if this candle's got to get taken to the upside on the close, and then consider running with the last breaker. Let's see this close below here and clean out this little breaker right here on a 15-second chart. That's good. Now you want to see a nice little fair value gap forming in here. That's below. There's a body starting below. Tap it and start running lower. Yep. Head for that discount box now. Watch this. I do not want to see bodies starting to get up into here, otherwise you're back inside this range. Okay, keep coming. Looking for that discount box. I think that's going to be it for me, you guys. What time is it now? 10:50. The new macro is just beginning now. We're still using this breaker to go lower. I like to see it just hit it once. I don't like to see these multiple hits driving back and forth into it. You want to see it hit it once, roll over and go lower. Price is still very sloppy. Okay, hit that little box below us and then see if we can start running through all this chaff here. Start running lower. If not, look for a retest of this mean threshold of this candle. We still have an imbalance. Busy right here. Look at that imbalance here. There's so many overlapping arrays here. Nothing's clean on a getaway, so I'm going to close up shop there, and I will see Russell. I'll see you shortly, and Reza, I'll see you this afternoon, and Wayne, if you're still popping around, we'll see you this afternoon as well. If not, I will see you guys not tomorrow because I'm flying back. So I will see you guys on Friday morning. Then we've only got a couple of days left, and I won't see you guys again until December. I got a few more days left, and then you guys are going to be talking to Hadi on the Telegram channel. I'm still debating whether or not I'm going to take my computer on vacation with me. So I'll think about that. Anyway, we'll talk to you guys tomorrow. Have a great day, and I'll talk to you guys, the rest of you guys, in an hour or so. Just text me, Russell, when you're ready to come over. I'll talk to you guys soon. Take care.